And that downward trajectory is continuing, and that's an outcome of twofold. One is the prices versus a year ago are coming down because last year prices were really high. So the rate of increase is certainly slowing down. And I think second of all is a result of some decreases in the supply-driven cost factors, in particular for more goods rather than for services.
How about we actually get started? What I want to talk about is actually a number of things today. So hopefully we will have an hour, and that 60 minutes is actually going to be enough. But nevertheless, the first question is inflation forecasts. Obviously, a lot going on around the globe. You know, at the moment, inflation is kicking in, and basically there is, the banks, the global banks around the globe are actually lifting rates at the moment, or some of them are coming to the end of the rate cycles. What are your thoughts?
Yeah, so I think let's start off with the U.S. market. So I think the U.S. market certainly is seeing a downward trajectory of the interest of the rates, inflation rates. They've been declining consistently throughout this year, probably not at the accelerated pace that the Federal Reserve would want it at, to be frank. But their tightening monetary policies are working. We are in the month of May. The results that the Bureau of Labor and Statistics will be releasing today, we're certainly expecting that to come down at Truflation. Our forecast is that it's going to hit 4.2%. And that downward trajectory is continuing, and that's an outcome of twofold. One is the prices versus a year ago are coming down because last year prices were really high. So the rate of increase is certainly slowing down. And I think second of all is a result of some decreases in the supply-driven cost factors, in particular for more goods rather than for services.
Okay, fantastic, excellent. Okay, and so in terms of the CPI data, obviously that's coming out tonight, I believe, and obviously there's an interest rate, Fed interest rate decision that's coming out, I believe, Thursday here in Australia, but Wednesday night in the US. What do we expect from the market? Like, what do you see? What is the playbook that you believe will actually unfold over the next week or so? At least if you can give some guidance to our traders as well, because a lot of our traders here, when we talk to them at the desk, they're all, all about data-driven decisions and stuff. And a lot of them are actually a lot more macro fundamental than I would say probably the technical side of trading as well.
Yeah, so obviously this is no financial advice whatsoever.
Absolutely. I did actually, my apologies for interrupting. I did forget to say that actually. So everything we discussed today is general in nature. It's not a personal advice by any means. It doesn't take into account, personal nor financial situation of any individual. So yeah.
So based on that, our prediction and our estimation is that, first of all, tonight, in 8 hours or so, the Bureau of Labor Statistics will announce the inflation number. We're expecting that to drop from 4.9 to 4.2%. The market ranging, and the estimates in the market are ranging anything from 3.9 to 4.8. So it's a pretty wide range. But I think the average and the medians are sort of around 4.1 to 4.2. So we're pretty much spot on that. I think the second thing then, as a result of that drop of inflation, the FOMC meeting is scheduled to happen on Wednesday and Thursday in the US, and they'll be making a public announcement. I believe it's at 2:30 Eastern time or 2 p.m. Eastern time on Thursday, the 15th of June. And our expectation and prediction and expectation is that they will hold interest rates and not increase it as previously expected by the market. Earlier, like 2 weeks ago, the market was expecting a 25 basis point increase. Increasingly, more and more people are assuming it's holding flat, and that is very much our prediction, that it's going to be holding flat. So there's going to be no further increases, at least this week. And I suspect that trend will also continue on the next meeting, and then they will see what happens then they'll have the August break, and then they'll see what happens with inflation all the way through till the beginning of September when they have their next meeting.
Fantastic, excellent. Okay, so you believe we are actually at the end of the rate cycle, and that 525 might be the tops or the max, at least in the short term. But obviously, more of that will be dependent on the CPI data and wages, labor market as well, because that's actually kicking off quite. It's quite high in the US at the moment.